All right, welcome to The Explainer. Today we're diving into a really fascinating setup. A whole bunch of factors that could be getting ready to trigger a massive shift in crypto and, the wider financial markets. We're going to look at a series of catalysts that are all just lined up, waiting for one single thing to kick it all off. So, the big question is, what could trigger this next crypto explosion? We're about to unpack a chain of events that are all connected, stretching all the way from the halls of Washington, D.C. to the global economy and right down to the nitty-gritty code of major crypto projects. But first, let's talk about the biggest thing holding everything back right now. Okay, so here it is, the first domino that has to fall. According to our source material, the single most critical piece of this whole puzzle is the US government shutdown. Right now, it's just creating this state of peak uncertainty, and it's really seen as the one thing that has to get resolved before anything else can move forward. And you gotta understand the core idea here is that this shutdown isn't just some political headline you scroll past. No, it's a huge economic deal. Getting this thing resolved, that's the key that could unlock a whole cascade of positive events for the markets. The uncertainty is just off the charts. So high, in fact, that even the prediction markets, which are usually pretty good at calling these things, are totally split. They have no idea what's going to happen next. And here's a quote that really gets to the heart of the political mess. Congressman Tom Emmer kind of lays out the tough math they're dealing with. He's suggesting that for one party, keeping the government closed is actually a strategic move. It's about showing their base that they fought the good fight, even if it means putting the brakes on an economic recovery for a little while. But then you flip the coin and you've got this statement from Mike Johnson. He's basically saying, hey, we've got a plan ready to go, immediately, the second a deal is struck. So you see the tension, right? That's the real story here. It's this tug of war between the political need to look tough versus the very real practical ability to get things done once this whole logjam finally breaks. All right, let's step back from all that political drama for a second. Let's zoom out. Because beyond what's happening in DC, there are some really powerful macroeconomic forces just waiting. We're talking about huge, big-picture trends that could act as a massive tailwind for the market, but only after that first logjam gets cleared. So where do we see this pressure? Well, the source points to a really clear indicator: consumer spending. Let's be real. People are feeling the squeeze from inflation. And what's one of the first things you cut back on? It's the nice-to-haves, right? The discretionary spending. And the restaurant industry? It's pretty much always the canary in the coal mine for this kind of thing. And this chart, wow, it just paints the picture perfectly, doesn't it? Take a look at Chipotle's stock. It took a major hit right after the company came out and said, hey, people are dining out less. That is a direct, crystal clear reflection of everyday folks tightening their belts. But, and this is the crazy part, here's the contrast. While the average person is maybe thinking twice about buying a burrito, get this, the S&P 500 has added an absolutely staggering $18 trillion in market value in just 6 months. That is just a mind-boggling amount of wealth being created. And this slide, this really nails the idea of the two economies that seem to exist right now. On one hand, you've got the consumer squeeze, right? People are cutting back. But on the other hand, you've got this explosive growth in assets. And this points to a really key argument from the source material. In an environment like this, owning assets, doesn't matter if it's stocks, gold, or digital assets, that's seen as pretty much the only way to beat inflation. Okay, another big macro catalyst to keep an eye on, global tariff agreements. As you can see here, there are several key deadlines coming up pretty fast. Now, a deal with any of these countries would be good news, for sure. But the source really flags that a partial deal with China, which, by the way, prediction markets are giving a 46% chance, that could be a huge shot in the arm for market sentiment. And last but not least on the macro front, we've got the Fed. Their big program, quantitative tightening, or QT, is scheduled to end. The easiest way to think about QT is the Fed basically sucking money out of the economy to fight inflation. So when that ends, well, it could totally pave the way for a new cycle of easing. That's where the Fed might start pumping money back in by buying up bonds again, which would inject a whole lot more liquidity and capital into the markets. All right, so we've covered the politics, we've covered the macro picture. Now let's zoom right into the crypto space itself. Because while all this other stuff is swirling around, the crypto industry has its own set of major developments just coiled up, ready to spring, waiting for the economic skies to clear a bit. And boom, here's where it all connects right back to that first domino. A former SEC commissioner, Paul Atkins, explains it perfectly. He says the shutdown is directly holding up progress on huge crypto regulations. We're talking about rules for putting crypto in retirement accounts,
and even taking another look at the whole accredited investor standard. That's the rule that basically says who's rich enough to be allowed to invest in riskier stuff.
So this kind of lays out the potential chain of events on the regulatory front. Step 1, the shutdown ends. Then, things can actually start moving again. The source specifically calls out the Clarity Act as a really big piece of legislation to watch. The whole point of that act is to finally give some clear rules of the road for the crypto world. Defining what's a security, what's a commodity, and if that moves forward, it could absolutely move the markets in a huge way. But it's not just about regulation. There's also this massive wave of tech innovation that's been building up. And honestly, this is where things get super interesting. You've got a major Ethereum upgrade coming that's meant to boost capacity and slash costs, basically make it much more usable. Then you have this explosion in tokenized assets. We're talking about things like real estate or fine art getting traded on a blockchain. And on top of that, we're seeing brand new links between AI and crypto for automated payments, plus just continued global growth. All these powerful things are happening at once, just waiting in the wings. And look, this isn't just theory or some far-off promise. To give you a real sense of scale, check this out. Japan is now pushing 6.5 trillion yen of its credit card volume through the Avalanche ecosystem. That's not a test. That's a massive, real-world use case happening as we speak.
So, you've got the politics, you've got the macroeconomy, and you've got all this crypto tech. The big question is, how does it all fit together? Well, that brings us to the central idea from our source, something they call the cascade event.
The whole theory is that these catalysts aren't just separate, isolated things. No, they're all linked. And that government shutdown, it's the main logjam that's holding back the entire flow of capital and, just as importantly, market sentiment. The idea is you pull that one block out of the way and the rest could start to fall, one right after the other, in a super fast chain reaction.
So the key takeaway here is that the market feels like a coiled spring. All this incredible potential energy is just sitting there, waiting. But with so many huge variables just up in the air, it creates this feeling of massive uncertainty. But what the source suggests is if even a couple of these dominoes start to fall, especially that first one, the shutdown, market sentiment could flip on a dime. It could go from fear to full-on optimism, and it could happen fast.
And really, that's the ultimate question this whole analysis leaves us with, isn't it? It just perfectly highlights this razor-thin line between risk and reward in the market today. So, when everything is up in the air like this, are we looking at a moment of peak uncertainty, or is this really a moment of peak opportunity? Thanks for joining me for this explainer.